Good morning. All right, good morning, good morning, good morning. Testing, testing, 1, 2, 3. 1, 2, 3. Guten Morgen. It is 8:02 in the a.m. Can we confirm we have sound? Let me get the chat going, got my drawing tool going, everything seems good in the hood. It's too loud, yeah, it's too loud. All right, so I did make some changes. I can turn it down a bit. How about that? So we went from not loud enough to too loud, so that's good, right? Yeah. In sooth, I know not why I am so sad. Hey, baby, let's go. Jigga Slim Shady. Let me remind you that trading's risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Camera's still not quite right, huh? Huh? A little better? Should be way out here, huh? Way out here. Anyways, hey, good morning. My name is Wayne McDonald. I'm a currency trader. Yeah, boy. Hey, great taxation, great use of leverage, great ability to run a small business. The fact that you're mark to market, these are all massive advantages that trading other asset classes just cannot offer you. So trading Forex, I've found over the last couple of decades, is the best way to go. Even if you want to trade the stock market, let's say the S&P 500, or whether you want to trade oil, or whether you want to trade gold, or just macroeconomics in general, all of that can be accomplished through the foreign exchange trader, but the foreign exchange market, but you get better tax treatment and better leverage and better income, and you're mark to market. Like, why would you do anything else? I can't imagine. So anyways, welcome to Forex.Today. This is a community of 15,000 plus foreign exchange traders. We like to get together this time of day to align our satellites, coordinate as a group, get this straight, get this strong, talk about technicals, talk about fundamentals. And I think what we'll do today is I'll just let you guys ask about what currency pair you want me to cover, or exotic, or commodity. If you want me to do gold, oil, Bitcoin, if you want me to do something else, I'll do that. So we'll just leave it up to you guys. You're the boss. I'm just a humble currency trader. Huh? So we'll do that today. Also, I'd like to thank the sponsor of our community, tradersway.com. They're a broker. You're a trader. They want to fall in love. So what they're trying to do is woo you over through investing into your success today, right, in the hopes that you get successful in the future. They're also wooing you with competitive spreads, wide swaps, fast execution, world-class customer service, world-class charm. So they're trying to woo you over there. So please give them an opportunity to earn your loyalty and respect. That's all they're asking for, is an opportunity to earn your loyalty and respect. Visit tradersway.com and open up a demo account. Cool. So as a member of our community, please write your comments below the videos. And of course, if you are new to these webinars, I've been doing them every day for almost YouTube's only been around like 12, 13 years. So since YouTube was a startup, a little beta tester, I was one of the first people on YouTube, and I was the first Forex trader on YouTube. So there's over 1,000 videos on the Forex.Today YouTube community, and there's also 4,000 videos on the FX Bootcamp YouTube community. So all those resources are available to you to help you succeed. Why spend all your time trying to reinvent the wheel when you could leverage that kind of knowledge? So anyways, thank you for being here. Let's get on with it. Let's get on with it. Can you see everything okay? I'm going to cover that tomorrow in the live trading group. Okay. Farid says, hey, all dollar pairs and all yen pairs. No, one at a time, bro. Okay. USD CAD. Thank you, Alejandro. Start with CAD. First of all, is CAD strong or weak? Moderately strong versus Aussie, weak versus dollar, neutral versus Swiss franc, weak versus yen. So it's moderately weak. Okay. So you want to cover USD CAD, and it's going up a bit. Okay, fine. If it's going up, do you want to buy high prices or do you want to buy low prices? Tell me what you want to do. What's your strategy, Alejandro? Jeff says, "What if you're planning tomorrow? What does this mean for now?" Nothing. That's why I generally don't trade cross bears, or I generally don't trade. I don't trade these scans. I'm just looking for strength. Okay, so in the moment to me is irrelevant. So Jeff brings that up, but that's not what we're talking about now, right? All right. So Alejandro wants to buy low. So here's how it works, Jeff. In regards to tomorrow. We want to buy down 132.50. Is that going to happen today? No. But Jeff and Alejandro, if this happens tomorrow, then you possibly, it's plausible that this comes down tomorrow. And in that scenario, it's possible that you could buy it. Johnny says, who knows? That's true. So that's the idea. You have to create an if-then statement, Johnny. If you're a bull, then you want to buy low, right? So if price comes down tomorrow, Johnny, then you have permission to consider buying it. Okay? You see that? It's an if-then statement. You don't know, and whether, right, it's sort of irrelevant. Like I never pretend to know, but I know what I'll do if it does happen. Then there's a difference, isn't there? Right, Jeff. So you wait. Or you scalp down while you wait. Okay? Yeah. We're preparing for the end of the year. Okay, so anyways, so it's an if-then statement, okay? You got that, Johnny? Well, it's not freakily because it's actually doing the math in real time. Okay? So my predictive pivots are doing the calculations in real time, so that is why they're freakishly on M2. It's not freakishly, it's just how the math works. There's a reason for everything, right? Remember, standard deviations is all it's calculating. Okay. Well, I want you to understand the math. So anyways, there's the if-then statement. Okay? And you can see we got something reasonable going on here. Okay. So I don't know if you want to capture this or not or what. Okay. But there's definitely something going on. And now you can add more information to see if it's helpful. We can add some bias pivots, for example. And you can see it's also next week's buy zone. Okay? But you have to understand, why does that work? Well, it's the math. That's why I keep telling you guys, you need to throw yourself in the math and understand the math. This is looking at that. So it's no coincidence. Okay? So now we're left with this if-then statement. So it's Wednesday. You might have to wait till Monday. Yeah. Okay. Ooh, I can taste the coconut in my coffee. Strange. Okay. So you see the focus here? Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 up. That's obviously what a bull is thinking. And of course, if that pattern fails, that's also technically relevant. Okay? By the way, I did spend significant time yesterday working on my microphone. Is it a little bit better? Is it a lot better? Is there no change? Is it worse? How does the mic sound today relative to, let's say, the last couple of weeks? Yeah. But the quality isn't as good as it sounds distorted. Oh, well, let me turn this button that I don't know what it does. Hang on. Oh, if I get too close, it's distorted now. Okay, that's interesting. So I had to have it really close before. I'll turn this down here. Maybe that reduces. Maybe that reduces, right? Yep, that's good there. Also, to keep the distance, very, very low now. No way, get out of here. Oh, Johnny, you're wrong. I can please everyone. All right, hang on. Hang on. Yeah, it's better that it's loud for sure. Maybe I'll get this thing on. Maybe that'll help. Hang on. Huh. It's not going in. Come on. All right, I'll have to do that off camera. All right. Well, at least louder is better. Now, I'll talk this way maybe. I read the brochure and it says I'm supposed to speak to the side. But maybe for distortion, this is better. So anyways, I'm glad at least it's louder. The filter won't do anything. I thought maybe it would keep the distance. No, it's a USB. Keep it at a distance. All right, so let's do this. Let me put it back. I did have it side view. And I'll just keep it there for now. And I'll turn up the volume. Pump up the volume, pump up the volume, pump up the volume. Yeah, yeah. All right. Cool. Yeah, boy. Never mad at the fact he's corrupt like a senator. All right, cool. We'll leave it at that then. Now too low. What do you mean too low? All right, we'll leave it here. All right, we'll keep everything. It's perfy. All right, cool. So let's do the next one. Johnny. Don't, Johnny, don't. All right, next. USD ZAR. For RC Cola. We got to go exotic here. USDs are getting crushed, y'all. Getting crushed. You will not delude. Well, I want to see. The reason I'm only deleting these is I want to see what we were looking at earlier. Okay. So, what do you think of that, Raymond? If we're doing a regression study, we are 2 standard deviations from a mean on this time frame going back to the beginning of August. So that would suggest an overbought scenario. We're tickling 17. It's not necessarily a sell, but it is overbought. Oh, that coconut is weird. Look at me, I'm in ketosis. Yeah. So anyways, it is overbought, but that's not necessarily a sell. But you can start saying, like, if it starts to reverse here, then you're interested in selling. So now you drop into a small time frame and start planning it out. Yep. Yeah. For October. But again, remember, guys, you don't sell because of front running the M3. I mean, you can, but you can't. You can, but you can't. It's easy to fall victim to relying on your algorithms. Remember, your algorithms don't think. All they're doing is carrying out the instructions they've been informed to carry out. AKA, it's just the algorithm. It's just the programming. It's just the code. And what the code is telling it to do is do measurements of this period to predict measurements of next period. But we're in the current period, and the way that the math works is you're almost always there now, right? Like, what you're looking at is that monthly M3 is, it's calculating standard deviations and midpoints between standard deviations and a weighted mean average, all of which are in flux. So you're always going to see this near that. It's always going to be set for that. And you got to be careful. Okay? So I'm not telling you to buy and or sell at M3 and buy at M2. What I'm trying to tell you guys in all the strategies, and it's very easy to get reliant on your indicators. What I'm telling you is you're supposed to be using whatever indicator you want to indicate whether the trend is up or down. So I think what Raymond wants to do is sell, but you don't want to sell because of this. You want to sell because of this. Right? It's very easy to get caught. We use these tools to measure for this. We don't trade because of the tools. Okay? So in this case, if you've done your fundamentals and you believe this will turn down in the future, our algorithms are telling us it's not now. Okay? That's the first thing. Okay? And of course, I'm not just speaking to you, Raymond. I'm speaking to everybody. Okay? So now the second thing is your alpha that outsmarts the beta. Your alpha here, Raymond, is that you believe this is going to go down, but you also know it's not going down now, but you believe it will be going down, which is the most important part of that equation. Your algorithm can't do that. And now you would say, because of this process, if you got a reversal pattern at a price like this, in particular 2 standard deviations from a weighted mean, okay, then that would be technically important, And that's when you would immediately and faster than everyone else consider this a new trend. So consider me a new jack, right? So you're on this faster than everybody else. But not because next month's M3, that's a small piece of the equation, right? Because you're predicting this at a level that is technically important that would indicate this new move this way. And you're selling rallies, early in the trend. Because you already know what the trend is going to be in the future because you've done the analysis, right? So we got to be very careful. What can happen is people fall prey to trading indicators, but not trading reality. Right? If MACD could trade a portfolio of other people's money, they wouldn't be paying you to make decisions because MACD can do it just as well, and you don't have to pay MACD 20% of the profits and a 2% management fee, right? But we know MACD doesn't make decisions. It just carries out the algorithm. So now you need to use these tools to decide, are these the right market conditions to carry out my strategy? And if so, what are the tactics to carry it out properly? Very important, right? Yeah, you got it, right? And of course, I know you know that, Raymond, but it was a great setup to remind, but also to inform everybody else. Right? So never, ever, 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 ever do something because of an M3. And of course, on top of that, never, ever, ever, ever never, ever, ever want to sell a monthly M3 that is a higher high. Okay? That's danger zone. I'd rather you sell an M3 like this, and now the sell zone is like this. Right? Let's say the sell zone looks like this, and now you're on a monthly M3. Okay? Oh, for sure. You see, there's a big difference, right? This is aggression, but if you want to do it, you can do it. Just realize it's not low-hanging fruit to sell a higher high. You're up on your tippy toes here, and that could be dangerous. Okay? What do you guys think? Okay. If you measure this way, we're at exactly a 618 Fibonacci retracement. Which tells me that's actually one standard deviation, not two standard deviations. So that's interesting. Okay. So could Raymond have a plan now to say, Raymond believes eventually that we're going to have a downward move like this? Is that technically plausible, or is he insane? No, that's definitely technically implausible. So now we just need to get the fundamentals behind it. Well, right, so Fibonacci is 62%. One standard deviation is 68%. Right? So the difference between the two, way out here, we're so zoomed out, there is no real difference between 62 and 68% on this move, right? So it's no coincidence. Maybe that's why the standard deviation works, or maybe that's why Fibonacci works. Okay? And of course, what would Wayne do? I'd say, forget the 62%. That's stupid. And forget 68%. That's dumb. What you really want to pay attention to is 66%. That's smart money. Which is, in my mathematics, 2/3. Okay? And if you think about it, the math is much more accurate on a fraction, because I can get a bajillion digits and still have room to be even more precise. Right? 62% is 62%. You can't refine that. 2/3, you can refine it forever into infinity. And Roger, right? Yeah. Is that a GAN number? Probably, eh? All right. What's up, Roger? All right, so let's do another one. How can I help you? What currency would you like me to cover next? Please let me know. Kiwi dollar, euro dollar, pound pairs. I guess I'm gonna pick pound dollar then. Okay. Pound versus dollar. Weak. Euro versus pound, weak. Euro dollar, wrong pair. Pound Noki, strong. Pound versus Swissy, weak. Pound versus Aussie, strong. So what have we learned here? Tell me that you understand the importance of relative strength exercises. What did we learn here? Is pound strong or weak? No, it's not a mixed bag. We learned something incredibly important. Yes. JV, got it. Hey, by the way, JV, how long have we known each other? Was it a little time, or did we know each other like 5 or 6 years ago, or even 7 or 8 years ago? Yeah, you're relatively new here. I'm wondering if yeah, anyways. Okay. Anyways. So let's look at this. There must have been maybe a different JV. Okay. So we know pound is weak. There are lots of things going on. We got Brexit problems. We got the Prime Minister shutting down the economy again. Everything is bad for the pound, except Noki, for example, is weak. Okay? And Aussie is weak. This is Noki, not New Zealand. So we could probably guess that oil is weak as well. BTI, not BTI, sorry, Brent specifically. Now we could change this to Kiwi, for example, and let's see if that helps. So where's the pound Kiwi? Euro. Pound Kiwi. Neutral. So you could isolate now. We just learned that it's plausible that everything on the planet versus Norway, like for example, even the US dollar is stronger than Norway. Isn't that amazing? So if pound is weak, now you can see how weak pound really is, because now I throw down a dollar and it's just destroying Norway. Okay? And that's how you get yourself onto something that's moving, something that's hopping, or at least has been hopping. This is helpful when you don't understand fundamentals. So what you do is you try to find it through relative strength. And as I explained, I think it was last week, this is where I started as a Forex trader, where I did at least 1 hour, probably 90 minutes worth of analysis, relative strength, not through the charts, but through volatility analysis. I would come up with strong versus weak for the day. And, if it's been weak for the last couple of days, often it'll continue to be weak. And of course, I learned that that was a trend. And I'm like, well, why is that true? And I started to learn about macroeconomics and business cycles and all that kind of stuff. So what do you think of this now? Okay. Now, the standard operating procedure in September is to buy at this price and not go through to S2, but go for S3. Huh. Peter says, do I know? No, I don't know. But if you read Daniel's notes, I'm sure you'll find. Oh, you know what? I think I made a separate video for it, actually. I think I made a separate video for it. Hang on. YouTube.com Forex.Today. Let's see. What is all this stuff? Live now, everything's live. How to match strong versus weak currencies to make the best trades in Forex. How about that one? So let me give you the link. Okay, and make sure you guys leave comments and maybe pop it on social media. Why? Because you're supporting the channel. Okay. All right. So now we're on Norway. Dr. Sethu, I don't have predictions. I only have analysis. I know what I want based on fundamental analysis, and I know what the charts tell me technically, but I don't have any predictions. And I know you're thinking, oh, come on, dude, it's the same thing. It's not the same thing. The language is much different. Okay. No, I did not. But we can get to that. So what do you think of that, guys? Okay. What do you think of this Norway? It's interesting, right? Does anyone trade Norway? The crown. Okay, what is your... We'll get to there. We'll get to it, okay? Doctor. Norway is rich with oil, for sure. It's definitely a commodity play. Okay? And it is correlated to Brent. So why don't we go look at that? But did you guys appreciate how we looked at pound pairs to discern that you should be selling the Norwegian krona? Krona? I always forget, is it crown, kroner, krona? But anyways, they're crowns. So let's go to Brent. Okay. And Brent is just working its way down to our support line. Yeah, Mark, look, Mark, if you're trying to learn swing trading, why don't you consider joining our swing trading group? That would be probably the quickest path to get what you want. Right? So part of your FX Bootcamp courses is the swing trading course. And then you could also be a part of the swing trading group on Thursday. So we're going to meet tomorrow. That would probably be the path to least resistance. Okay? FXBootcamp.com. Now you got to have money. It's not a lot of money, but you don't have any money, right? You got no money, you got no car, you got no woman, and there you are. So I can save you a ton of time, but you have to put money in the slot. Yep. Cool. FXBootcamp.com. Less than $400, dude. All right. Yeah. All right. So there's your my oh my Brent. My oh my Brent. So we're still in the sweet spot sell zone if you're a bear. If you're a bull, we're here, and this is what we call as fib wars. Okay, this is not a great place to be trading because bears are selling where bears would sell. So let's just call this out as a 618, right? You'll see. There's the 618 Fibonacci retracement for bears. Okay, this is what bears are thinking. Let me get a color here. This is what bears are thinking. Okay, you guys agree with that? That's what a bear is thinking. Sell the lower high at a 618 Fibonacci retracement. Okay. Okay. Cool. Now, what would a bull be thinking? Would you guys agree with that? It's also a 618 Fibonacci retracement. So what I've done is I've already highlighted all this stuff. That's where a bear would sell. And you can see the gray zones, right? This is where a bull would buy. This is where a bear would sell. And this is where amateurs lose money. Because there's no trend here. Bulls are going to buy low, bears are going to sell high, and the odds are about 50-50, depending on the direction of the trend. But even then, you don't even really know. No, they won't, Pure. They don't learn. There's always people in there, right? They don't learn. They go broke. They're chasing dreams. They're chasing their tails. Okay? So, I prefer to wait for trends. Now, it's also very important, okay, that you understand what you want. Do you know what you want Brent to do? Do you want by December 31st, 2020. Do you believe Brent will be higher or lower? And if you don't know the answer to that, then stop trading it. Okay? Otherwise, you're just running around in circles. Let me tell you about heartache and the loss of God. Wandering in hopeless night. Okay? FX Noob, we do offer private mentoring one-on-one. Not very often, and to a very select few that are ridiculously serious. And it's not cheap. But that can be done. I'm the type of person that likes that stuff. I just want to be shown, I want to see it, and then I got it. I can do it. Because then my ridiculous, sickening work ethic takes over. And sometimes that's a problem because I only know 80% of it. And I'm like, I got it. Let me go, right? And then you get in the ring and wham, wham. Like, oh, okay, I got to improve my blocking. So I go back to the coach. How come the guy smashed my face in? He's like, you got to keep your left hand up, dude, up. Oh, and then off you go. Peter's like, are the swing trading videos recorded? Absolutely, they are. Oh, for sure. So anyways, how many people tell me, do you guys want Brent to go higher, lower, or question mark? What is your opinion? Higher, lower, or question mark? Do not say anything else. Thank you for responding, by the way. Thank you. I appreciate it. Thank you. You're far too kind. No, I can't think and talk at the same time. Thank you. You're far too kind. Do. What the hell you waiting for? Yeah, little Jay-Z Linkin Park. Higher, lower. Okay, most people want higher. All right. By the way, for those that typed in question mark, thank you, first of all, for being honest. Second of all, it's honest, and I don't expect you to have an opinion on Brent. I don't expect you to have an opinion on Noki. So that's all fair game. But now, Emerald, you should be watching this. If you're worried about Nigeria, you should be watching Norway, and maybe there's some correlation here. Okay? But I want you to understand, when you get to the point where you are going to trade other people's money, I know a lot of you say, well, I don't really want to trade other people's money. Well, I explained yesterday why you probably need to someday. To hit your economic goals, we need cash flow. And it'll be a time for cash flow to pay for your mortgage while you get filthy, stinking rich. And the way you get filthy, stinking rich will always come back to Forex. So you can't, right? So anyways, so here's the thing I was saying, though. When it comes down to whatever you're trading, and again, I'm not assuming you trade Brent. I'm not assuming you trade Norway. That's fine. So if you don't know, you don't know, and I appreciate that. But when it comes to the question mark, I want you to think of this. In the future, when you do trade other people's money, ultimately, they're trading you because you have an opinion. They're investing. They're investing into you because you're opinionated. You've done the research, you've seen the facts, and you know what the hell you want to do and how to do it right. Right? So I'm not picking on the question mark people. I'm just saying I want you over time to have so much research done and so many facts reviewed that you become very opinionated because you know what's right. You're not listening to the idiots on TV. You're not listening or reading You're reading the opinion section of Wall Street Journal, and the guy with the journalist degree has an opinion for what things are going to be like in the future. You're not taking stock tips from your shoe shine boy, right? You don't care about anything else. You've read the reports, you've seen the facts, and you know what's going to happen, and you know how to carry it out. And people will pay you for that. And even if you're wrong, it's okay, because people will follow your opinion. And if you see the very famous gurus, there's the guy that always says, it's the end of the world, it's the end of the world, it's the end of the world. Each guy has found their niche, right? But the thing is, because they found their niche, they have a following, right? And therefore, then they make money, because if you keep saying you've done the research and you believe it's the end of the world, and if people invested with you, you can protect them from the end of the world. Thank you, An. An knew exactly what I was talking about. Yes. And then there's other people like, the dollar's worthless, the dollar's worthless, the dollar's worthless. And if you invest with me, I'll protect you from the worthless dollar. And then other people are like, Bitcoin's going to $100,000, Bitcoin's going to $100,000, Bitcoin's going to $100,000. And if you invest with me, we'll make money along the way. And, now you'll attract those people. If you don't have an opinion, you're like, I have a pretty good track record. I've been trading for 5 years and I'm pretty good, right? And people don't know, like, why would I invest with you? I'm pretty good. I got my MACD, right? Like, no. So you eventually, whatever it is, you need to become opinionated. And that, when I do start my mastermind group, and I don't know if it's going to be next year or the year after, we will talk about this and how to market yourself, right? So at some point, I want you to practice being opinionated. And remember, you can't have an opinion unless you got the facts to back it up. Otherwise, you're just an airhead. Right? Right? You're like, oh, dude, are you talking about Norway? Oh, I'm totally opinionated on Norway. Let me tell you everything you ever need to know about Norway and why I think it's going up. Here it is. Fact number 1, if you go to the website, blah, 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 blah. Number 2, if you look at this research, blah, 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 blah. Number 3, if you look at the historic cyclicalation of Norway, blah, 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 right? And people are looking at you like, I don't know what you just said, but you're so passionate about your opinion. I want you to manage my money because I think I kind of agree with you. That's it. You understand? And you'll need this. Remember, you need to do this because to get to the next phase of your life, right? Because we were talking yesterday about financial freedom. To get to the financial freedom part of your life, you got to go through that process so that you can grow your trading account large enough so that you don't have to deal with clients. And pretty soon you're like, you know what, clients, you get to keep 80% of your profits, and it's just not really worth it to me anymore. I double your money every year, and you pay me a pittance. So you can say, well, so I think I'm not going to manage your money anymore. And they're like, what? You're not going to manage my money anymore? Well, not at 20%, but, how about 40%, 60-40? You can keep 60% of the profits. And they're like, no way. Then good, take a walk. I'm retired, right? And now you can really get the hardcore clients, whatever. But the thing is, you've deserved it, right? So going back to this, most of you guys are now bullish, okay? Most of you guys are saying Brent will be higher. So will that make, so are we actually looking at Brent now? Okay, this is actually Brent now. So you believe this will be higher at the end of the year. So what we need to do now is filter. Wait, my fire alarm's going off. Hang on. I think my daughter took an extra long shower again. You know what? I need to go deal with this. Sorry. My fire alarm is going off in my house. And it takes me, it's over 1,000 steps to get upstairs. So anyways, No, it went off. It was my daughter. So sometimes she gets out of the shower, that she's taking a 5-hour shower, gets out, leaves the door wide open. All right. Yeah, it seems to be off. Let me find out if the house is on fire. All right. Now, my wife's upstairs, so. It's weird, huh? Wednesday, wife's upstairs, children are upstairs. COVID's weird, huh? Well, I can't blame her, Johnny. I meditate in the shower every single day. So, anyways. All right, so what we're saying is you're higher, so now you got to use your filter. And you don't believe in the resistance because you're a bull. Okay? And you don't believe bears have the impetus. Now, you know bears are going to sell. You just don't believe that they have the guts. So now you filtered this out, and this is what your trade plan is. This is your new strategy. Now you got to carry out your tactics on smaller time frames. Okay? So now you're thinking some form of that. Mike says oil isn't Forex, Jim. Actually, that's not true. Anything that translates to pure money and pure macroeconomics is Forex. Okay? Oil is money. Okay? Gold is money. Okay? Oil is driven by pure fundamentals. NASDAQ is not. S&P 500 more so. Okay? But the stock market isn't going up because investing in those stocks, now I'm talking fundamentals of stock. I'm not talking about fundamentals of macro or something. Those asset classes are trading for different reasons, and people are making different decisions. Okay? So, for example, fundamental analysis, you would do the expected return of a stock is equal to the risk-free rate of return plus the beta. I'm trying to get this right. Plus the beta. What is it? Times. I think it's the expected return of the overall market, right? Expected return of the market. Not doing this right. It's hard to do this with amount. Minus, does anyone remember what this is? I think it's just the risk-free rate of return, right? The risk-free rate of return. Okay? And that will give you the price, right, of a stock. And that's not what's happening. It is risk. Thank you, Peter. So that's not what's happening in the stock market. The stock market is being directly impacted by some other things. Now you can take it further and say, well, that's what's happening in Forex too, and okay, and then we get in a pissing match and stuff. That's not the point. But oil is directly impacted by the supply and demand forces globally. You're not necessarily buying Apple based on what you expect 2021 revenues to be, or profit levels, or return on equity. that kind of stuff. What is it? 10 stocks represent 90% of these indices now. So there is something else unnatural occurring in those markets. Okay. So anyways. Emmanuel, yes. Just to be sure, does it mean when all commodities rally, the macroeconomics are doing well, yes, or improving, or expected to improve, hence risk on mode in the FX market? Well, not hence the FX mode, but more like if Japan buys more oil, what happens to the Japanese yen? Well, first of all, let me start over again. If Japan buys more oil, what does that mean for the Japanese economy? Expansion or contraction? That's cool, Cash. Anytime you can quote Marcus Aurelius, it's great, right? Okay, that would be expansion. Okay, the Japanese economy is importing more oil because they need more energy because there's more economic activity. More factories have to be open, more stores have to be open, more businesses have to be open, right? More people are driving to work, more products are being delivered, so that you need more energy, whether it's electricity, natural gas, oil, gasoline, whatever. Okay? So, then, because they need energy, what happens to the value of the Japanese yen? Okay? They're going to buy oil. Okay? So what is actually happening? Japan is receiving oil. So what does the oil producing country get? Okay, think of it as a balance sheet now. Let me show you the secret feature that almost nobody knows on MetaTrader. Check this out. Did you know that? You can erase temporarily your chart. Don't worry, it comes back. Did you know that? It's crazy, right? I like to do this from time to time. So you can have a balance sheet. Japan. Okay. So you have cash. Well, actually, it's not going to be that way, is it? It's not a bank. Ah, dang it! Son of a. How do I? Won't let me do it. Too bad. That was neat. Grabbed the wrong thing. Anyways, what I wanted to do is delete this. Okay, so what I was saying is they used to have cash as an asset, but now they have oil as an asset. So what did they give up? They gave up some of their cash. So if they bought $1 billion in oil, they're down $1 billion in cash, but now they have $1 billion worth of oil, and it's the same. It's balanced, right? All right. So anyways, so going back to this, cash went to the oil producing country. To the exporter. So what we're saying is Japan sent yen into the interbanking system. Okay. Converted it to CAD. And the exporter got the Canadian dollar. Okay? You see? And that's what's happening. So everything is good in Japan. In fact, things are getting better in Japan. Therefore, the Japanese yen weakens. Oh, wow. And see, when you started, you probably thought the opposite. When things are good in Japan, the yen gets strong. No. What's up, Lord Krishna? Okay. Krishna, it'd be both. We're trying to do both. Okay. So, for example, if this is what you believe is going to happen, the rest should be easy. What, you need me to tell you to buy dip? I mean, dude, come on. This is the, right? This is the part. Your decision-making process is the difficult part. The rest should be easy. Does that happen to pound? You have to think about it. What does the pound do? What does the Great British economy do? What is their balance of trade? What is their balance of payments? Like, for example, Japan spends 100% of GDP on energy. And G. Okay. So is that what Great Britain does? For every dollar the Queen makes, does she spend it on oil? And if the answer is no, then it wouldn't be similar. Please click the like button. Well, no, that's what I mean. That's what I mean, Joshua. The answer is no, it wouldn't be the same. They are different. Okay? And it, right? So what I want you to do, Joshua, is do some research and find out about the Great British economy, their balance of trade, their balance of payment, and look at that as a percentage of their GDP. And say how similar or how different is that, those numbers, relative to the Japanese numbers. Okay? And this is one of the things we've been doing a lot in the the swing trading group on Thursdays is looking at that kind of stuff. We're going to do all technicals tomorrow. Yeah. Well, see, here's the upside, Joshua. Once you look at it and come up with an opinion, now you can say, like, you're an expert because you looked up the balance of trade data, the balance of payment data, the GDP data, looked at how that import-export data is relative to GDP, meaning how important is it to the GDP in the UK, and then compared that to the same data in Japan. And because of that, you are now opinionated based on the research you've conducted. And that, my friend, makes you an expert. And if you have expert, you provide value. And if you have value, people will want to purchase that value from you by offering you money in exchange. Right? So yeah, Krishna said we also look at rupee, right? Rupee, right? Right? So Krishna, I don't know if you caught it, but a month ago, maybe 6 weeks ago, I used the Central Bank of India and their purchase of foreign exchange and gold, and how those policies at the central bank were carried out, and what the intended impact on the value of the rupee would be, and more importantly, why would they want to carry out a policy like that? And I thought it was interesting. Cool. All right, so there you go. See, what we're talking about here is the thought process, the analysis, the filtration of information into an opinion, which is another form of strategy. And now all you have to do is tactically trade this up if that is what you are, a bull. You know, you got to worry about 43.5, but you're looking at more like 46.5. Okay. Well, 45 actually, because the 618 predicts a 1382, correct? 618 predicts a 1382. I got the wrong number. Here it is. So it predicts this right here. The one below it is actually the sell, right? So I forgot to, in the filtration process, I should have removed this as well. Okay. So now, here's what you think the future is going to be like. If you did all that research and you're bullish and you bought a 618, roll reversal on the M2, kicking off of $41, then yeah, that's it. That's as straight up, as factual as that is. Right on, Alex. You know, I was a guest lecturer at the executive MBA program at Georgia Tech, the third best engineering school in the world. So I sat on the board with the dean of the business school at Georgia Tech, Georgia Institution of Technology, which is interesting. But that's before my Harvard days. So. Well, right now there's not a lot between. There's Rand, there's Peso, and that's pretty much it. Yeah, unfortunately. Yes, we can do gold. Let's do gold now. So here's our failed play at 19. Notice it never sloped up. Remember, the whole point of this was the slope up. Remember, I did the rise over run speech? It never sloped up. You'd have to be able to do the same analysis this way, right? And because it never sloped up, you never got a trade. Alex, many, I think, don't do enough of it. I'm surprised how dumb the industry is. It's actually very disappointing to me. How poor the media coverage is, how poor the analysis is, how poor the strategies are. I'm very rarely impressed. And I went through a sort of a depressive period in my trading career where I looked up to all these fund managers. And of course, the more I learned, the more I realized that it was just a wizard behind a screen. And they were not Illuminati. They were, Ivy League a-holes. So that's very disappointing. But it also means the industry needs to change, and that's where we fit in. Now, if you attended my Sunday webinar, I think it was 2 hours long, Off the Charts with Wayne McDonald, one of the things we discussed was Bill Ackman's trading during the COVID crisis. Okay. And he actually played it out the exact way that I would like to think that I would have done it too. And often through this crisis and other crises, and I've actually had conversations with my wife about it, so I can tell you how accurate what he did was, because I know a lot of people in the wealth management industry, and unfortunately in their industry, very few are able, like they may not actually be able to, or they don't know how to hedge. Many wealth managers are not allowed to use options. They're not allowed to use futures contracts to hedge their positions. So what they do is they get on their phone and they call their clients and they're like, yeah, your net worth is down 20%, but don't freak out, eh? And that's all they can do. And I've had multiple conversations where I think it's just horrible. I mean, dude, just take out some options. I mean, come on, protect the money. Come on, trade the futures to the south to offset your cash positions. Like, dude, because you're leveraged, you only need a small portion. Like, and then I see these wealth managers, their clients lose 25%, let's say, and then go to cash and then lose all the upside. And I'm like, oh my God, all you had to do was hedge them, right? So anyway, I get frustrated. I get very, very frustrated. But that's just how the industry is. Then you read about Bill Ackman. What he did was, once he realized COVID was hitting hard and fast, he used options to hedge. That's it. Took out a bunch of options to make money as the stock market was falling. He didn't want to get out the portfolio that he spent 10 years building. I mean, come on. He built a portfolio of billions and billions of dollars over the course of 10 years. He doesn't want to exit that. So he's like, oh my God, there's some downside risk to my portfolio. So he used an option strategy, aka insurance, that said, if the stock market falls, I want to make money. And the money I make on the option will offset the money I lost in the cash. Okay? So what he did is he used the option strategy, and in about 3 weeks made $2 billion. Then at the end of March, when he realized the worst is likely over, he took his $2 billion and bought more of his original positions. And it went all the way back up, as you know, to the all-time high, and he made another $1 billion. Remember, he wasn't leveraged anymore. That's why he made $2 billion on the way down, $1 billion. And so so I think ultimately in about a month or so, he made $3.5 billion. Okay. Cash says he's a slime ball, though. Many of them are, but the thing is, that is exactly, in my opinion, the right thing to have done. And his timing was superb. It was superb. So anyway, so we covered that. That was maybe 20 minutes of our 2-hour conversation. So if you like those types of talks, it's youtube.com/FXBootcamp, and we do them Sundays. I've been doing them Sundays at 5:30. The only thing is it's getting cold and dark here in America. Winter is on the way. Do you like my American accent? Winter? No, it's winter. Anyways, so I'm probably going to have to do this where we'll start at like 3:30, and by the time it's over, the market opens. And my intent is always like you should be at your charts at 5. And even though I give everyone the advice every Sunday at 5, you should be at your charts, and very few people actually take me up on the advice. So I figured if I do an event at 5:30 as a reminder that you're supposed to be doing your job, then maybe you do your job and then attend, right? So now I'm going to have to do it the other way. Maybe an hour and a half before the market opens, I bring you to your laptop, and you can participate in the conversation, and then markets open and you place your trades. I'm just trying to help you do your job and do it well. Well, Leo says Trump United Nations speech makes the dollar strong. Well, let's focus on that is somewhat true, but not exactly true. It wasn't the speech. So what is this? What did make the dollar strong? It was the content of the speech. And the content of the speech is Trump wants to go into a trade war with China. But I told you that in January, February, March, and April that this would be the political strategy. Could anybody agree with that? That 9 months ago we discussed the pending trade war that Trump would initiate in right? Well, like it's a foregone conclusion, right? It's what you would do if you were Trump. So the thing is, when there is a trade war or even a threat of a trade war, it's bad for business. Bad for business means risk off. Emmanuel says, I said it would be a possibility. I said more like probably. Like there's a lot of things that are possible, but I'm certain I said that because I'm certain I believe it. And I think if you remember the conversation specifically, I was talking about game theory. Okay? So back in January and February, we talked a lot about behavioral finance and game theory. And game theory is the discussion of the political moves. Okay? And that's a part of something called IPE. International Political Economics. And it's something I did study at Harvard from a rock star professor, actually. And this guy was great because he knew everything, but he didn't use a PowerPoint deck, and I don't think he even used notes. He'd just show up, talk for 2 hours. You better keep up. It's all going to be on the test. The guy was sharp. But anyways, it's tying macro politics and money together, right? And it was really quite interesting. And then in that class, one of the things we did was game theory. And so I had to read a whole book on game theory. Anyways, it's hard to think and write. So in that class, I had to read a book on game theory. And I remember my kids were doing robotics. They were in a regional robotics tournament, and they ended up moving on to the state championship. But while they were doing all their runs and stuff like that, and all the moms were sitting in their circle eating cookies and talking about, I don't know, Bachelorette, I was off in the corner reading books on game theory. And anyways, I really enjoyed that. And then I took it to the next level, and then I took an entire class, a 16-week class, probably 8 hours of lecture, and so 10 hours when you put in the section and the lecture, 10 hours a week, plus probably 20 hours of reading a week. So I'd say 30 hours a week for 16 weeks. I then studied game theory. And so it's very interesting how much game theory Trump actually uses. So that's what I'm talking about. That's what gets me to my opinion. So I don't know Trump. I don't know what Trump wants to do. I don't hang out with his cabinet, okay? But I can persuade someone that I've done the work to come up with my opinion and how I got there. And to somebody, that might be worth, you've totally convinced me. I wish I knew all that stuff, but I don't. But you know what? I want someone who does know that stuff to manage my money. So would you please manage my money? That's how you go that way. You're like, well, I do IPE and game theory to figure out future economic policies of, let's say, the United States of America. And then, of course, I know and understand how that would impact the value of currency, because it'll impact the balance of payment and the balance of trade within GDP. And they're like, oh my God, that just sounds awesome. You do all the work for me. I'll pay you 20% of the money. Okay? And that's how you got to get there. That's how you got to think. That's how you got to set your trades up, but then also set your business up. Okay? That's why it all leads there. So it wasn't the UN speech, like when the president speaks, does the dollar go up? No, that's not it. That's oversimplified. But in the context of IPE and game theory, what would Trump do to get reelected? That's the question. And that economic policy, or that political policy of the politics part of that, how does that impact economics globally? And in turn, how does the IPE impact FX? And based on what I think Trump would do for politics and its impact on the global economy, I can translate that to dollar strength. And we talked about it 9 months ago that I think it will happen. I believe it will happen. It's my opinion that that will happen. And now I can put my little pinky in my mouth and go, really? Right? Actually, I'm mixing up Ace Ventura with Mini-Me or Dr. Evil, right? Here's Dr. Evil merged with Ace Ventura. Can't make that up. Yeah, Leo says Trump ruined the MXM trade. Yeah, well, trade war ain't good, right? So what happens when we figure out that it's rhetoric? Okay? What do you think will happen once we understand its rhetoric? Or if it's rhetoric, let's say, then maybe the opposite could be true. See, open borders means weak US dollar. Why? We're sending our money elsewhere. We're buying productivity. We're lowering our inflation. See, it's deflationary to pay someone to do a job for less than you'd pay yourself. It's deflationary to buy a foreign television than a domestic television. If that weren't true, then we'd all be watching Zenith on our walls, but we're watching Samsungs. We're watching Vizios. Okay? I watch Xiaomi. Oh, but did I show you my Xiaomi phone? Dude, check this out. I just bought this the other day. Check this out. Hang on. How do I do this? How should I do this? There you go. OLED screen. OLED, baby. OLED. I love OLED. Everything OLED I love. Okay? See if you can see this. How many cameras do you see? Huh? Five cameras. 5! Okay? And the big one there, I don't think you'll be able to see it because of the light. 108 megapixels. Just the one camera. Beautiful. What a great phone. What a great phone. Awesome phone. Yeah. And my laser projector in the movie theater shot me as well. Incredible. Just incredible technology. And ridiculously cheap. Okay? So my phone was probably, I would say, nearly as good as a top-of-the-line iPhone, but 33% of the cost. So it was very deflationary for me because I had to think about it. Do I want to spend $1,000 on an iPhone? Right? Or $400 on a Xiaomi? I'm like, well, they're... Right? Well, actually, you know what, Emmanuel? So there was a time in my life when I was a photographer. It was a hobby that I did, and it was great. It was a wonderful period in my life. One of the pet peeves I have with cameras is people run around with their stupid 35 millimeter lenses, and they stand in front of like the family at a family reunion. Okay, I'm going to take your picture. And they're looking at everybody in front of them. Then they take out their camera and they go click, and the people are tiny inside of this picture. And I'm like, dude, zoom in, get closer. Like, you wasted 30% of the picture on the background, which nobody cares about. And now I can't see. Is that anti-M or anti-L? Like, I can't see, right? And it's because your eye is a 50 millimeter lens and your camera is a 35 millimeter lens. So, like, who the hell invented the 35 millimeter lens? It's stupid. And for the last 50 years, people have been taking bad pictures. They don't know how to take pictures properly. It's horrible. Well, this phone, one of the lenses is a 50 millimeter lens. So what you see is what you're going to get. It's a WYSIWYG type idea, right? You put it on the 50 millimeter lens and you go click, and it's exactly what your eyes see. Awesome. Awesome. Anyways. Beautiful. All right, so, yeah, that's that. WTI, my oh my, WTI. We're still in the buy zone, but it ain't going up, but, you know, it ain't going down either, right? So what are you going to do about this? cash like 2,000 in Australia probably. Yeah, amazing, right? Amazing. So I'm going to get the cheaper version for my wife, and it's like $169, and it's like an amazing phone. Like, just amazing. So, like, this charges at 30 watts. Your phone charges at 14. A fast one's 18. This is 30. How about this? 5,250 mAh. That's more than my electric chainsaw. Think of it. This battery, look how small this phone is. This battery is more powerful than the one that runs my electric chainsaw. It's crazy. 5,200 mAh. Like, wow, what amazing technology. So, like, that cheaper phone, well, it's only got like 3,800 mAh, and it only charges at 18, and all that kind of stuff. And it's not an OLED screen, but it's a high end screen. It's just not OLED, and so on and so forth. I'm like, for $169, that's crazy good, crazy. Yeah. So, boom. So, again, what does that mean as an economist? It means I live in a deflationary world. I get some cool shit, and it doesn't cost me very much money. Okay? So, right, 2,000 in Australia, $400 here. Right? So that means I have a higher standard of living. Because money, remember, money is useless. And like 2,000 Aussie dollars versus an American dollar. So what does it all mean? What does it all mean? Well, and by the way, my kids and I were talking about this. I'm like, look, if you go to Switzerland, it's probably $12 for a hamburger, $20 for, the number one meal at McDonald's. And I'm like, so I can take our family out for lunch and it'll be $100 US. And they're like, $100 US to eat at McDonald's? I'm like, yeah, well, we're poor. Switzerland's rich. It's expensive for us to eat there. But then you go to, you go to Turkey and you go to McDonald's. Dude, you could probably, spend $2 and get a number one so what does that mean? The hamburger's the same, the fries the same, the Coca-Cola's the same, but now it's $2. Well, it means people in Turkey don't go on vacation in Switzerland unless they're filthy stinking rich. Because it'd be $1,000, let's say, to eat at McDonald's, $1,000 worth of lira, right? All that kind of stuff. So, it's just the value of money, right? Just the value of money. And money is worthless. Money is stupid. Money is just a unit of account, right? Cool. But it's a standard of living, too. And that's why I say the dollar weakening is a sign of an increase in standard of living because it's deflationary. If I send my money abroad, if I give it to China and I get a kick-ass phone, right? Makes me wonder why people buy a $1,000 iPhone. Because it's made in the same factory as my phone. It's got the same screen as my phone, the same memory, the same battery, the same everything. It's from the same, and then they ship it and you're like, you're paying $1,000 for your iPhone? Why? Right? The $450 AirPods cost something like $18 to make. So Apple can sell them for $450 because, I don't know, because they can. And why? I don't know. Right? So anyways, so it's interesting, isn't it? Where you can send the money away and increase your standard of living. And what we're trying to do is line up standard of living with standard of living, right? And why is a Big Mac meal in Turkey $2 and why is it $20 in Switzerland? The standard of living is better in Switzerland. They can afford it. $20 to them is nothing. Because it's all relative. Right? It's not 20 Swiss franc, it's $20 worth of Swiss franc. So them it's the same. See, you can look at it, the Big Mac meal in Zurich, in Chicago, in Shanghai, in Tokyo, in Munich, right? In Istanbul, right? In Cape Town, it's the same hamburgers. It's the same Coca-Cola. It's the same potatoes chopped up and fried with some salt and sugar and fat, right? So the difference now is the currency relative to the economic activity, which is translated to the standard of living. If all you can afford is $2 to eat at McDonald's, because that's a lot of money, then guess what? McDonald's is going to charge you the maximum they possibly can, right? Would you guys agree with that? McDonald's will price everything to get a certain amount of sales. If they could charge $20 in Turkey, they would if they could. But nobody shows up. They're like, I don't got that kind of money. Well, how about $18? I don't got that kind of money. $12? I don't have that kind of money. How about $5? $5. You get fries, you get a Coke, you get a burger. I don't have $5, bro. 3? No. 2.5? No. 2? Yeah, I could probably eat once a week if it was $2, right? And they're doing that around the world. And what happens is it all equates to the same. It's the same. Okay? So now, if someone from Switzerland visits, Istanbul, they're like, oh my God, this is great. I go to McDonald's in Istanbul and it costs me $1. Right? They're like, it's amazing. Right? So that's the interesting thing, I think, of macroeconomics. And by the way, these are the conversations I have with my children. So that's what some of the things, right? So I talk about hedging our portfolio with my wife when COVID is dropping. I'm talking with my friends about buying stocks, anything that they believe will be around 25 years from now at the end of March. I'm having conversations about macroeconomics and purchasing power parity and the impact on the standard of living with my children. It's good stuff. So I share with you because you're also friends and family, but I also want you to take this knowledge, implement it into better trading to understand why money goes certain places and how you can predict the impact of that flow on the value of currency and how it benefits both economies. But at some point, I also want you to give it back and share that knowledge. Right? I don't want you to be a dirty hoarder of knowledge. Right? At some point, you need to deploy your capital and you got to deploy your knowledge. So you got to learn how to take the knowledge and turn it into a trade, take the trade and learn how to manage the risk. And then once you have that, put together a track record. Once you have that, put that into a business and then turn your business of creating good opinions into profitability so that you can grow your own trading account, right? And be financially independent. And maybe you're doing that with me along the way, right? In the next 5 to 10 years of our lives, we're going to be connected at the hip as you grow your successful business and launch your financial freedom. And then you'll be in a situation maybe where you're helping me share that knowledge with others. Because think about it, when you're on your deathbed, it's not the money you think about, it's not your yacht you think about. It was your contribution to society and whether you made the world a better place and whether you were meaningful. Whether anyone would even care that you existed. Would you agree with that? Will anyone remember? Will anyone miss me? And the way to die happy is to have a positive impact and influence on as many people as possible and maybe, just maybe, make the world a slightly better place. To be a shining light in a world of darkness. Wouldn't that be a nice way to end the whole thing? So you got to help me get you there. so that together we can have a positive, meaningful impact on society. Thank you for being here. Thank you for being part of the Forex.Today community. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Remember, if you need the training, fxbootcamp.com. The link is in the description below. If you need a broker, tradersway.com. The link is in the description below. My book, my chart templates. There's just a bunch of resources that you've asked me for, and I've created them for you. They're all down in the description below. So I'll see you guys tomorrow. Thank you.